The year 2025 has brought a silent but massive storm to the world of American real estate. It's not a market crash you see on the news, but something far more personal and potentially devastating for property owners. It's called the refinancing wall, and it's catching even the most successful investors by surprise. If you own commercial property, listen closely because this could be the most important financial update you hear all year. Imagine this: you bought a fantastic multifamily complex a few years ago. It's fully occupied, tenants are happy, and cash flow has been steady. You locked in a great interest rate, maybe around 4%. Life is good, but now that loan is coming due, and you need to refinance. You walk into your local bank, the same one you've worked with for years, expecting a smooth process. Instead, you hear a word you never thought you'd hear: no. Why? Because the world has changed. That old 4% rate is now colliding with a new reality of 6.5% or higher. Suddenly, the math just doesn't work. The bank runs your numbers, and even with your property performing perfectly, the new, higher debt service cost eats up all your profit margin. From the lender's perspective, your once golden asset now looks too risky. They see a debt service coverage ratio that's too low, and they turn you away. This isn't your fault. You didn't mismanage the property. You're a victim of a massive systemic shift. We're talking about a $1.8 trillion wave of commercial real estate debt maturing right now, all facing the same problem. This isn't just happening to multifamily owners. It's hitting self-storage facilities, retail centers, office buildings, you name it. You could have a thriving business, a prime location, and a perfect payment history, but the rigid formulas used by traditional banks are failing to account for today's unique economic environment. They're tightening their lending standards and pulling back, leaving countless hardworking investors stranded with a performing asset and no way to secure its financing. It's a frustrating and frankly terrifying situation. You've spent years building equity, making wise decisions, and now, due to forces completely outside of your control, you're at risk of losing it all. So, what do you do when the big banks say no? Do you just give up, sell at a loss? Absolutely not. While the traditional lending doors are closing, new, more innovative ones are opening wide. This is where the smart money is going. There's a whole world of specialized capital networks and private lenders who understand today's market. These aren't your typical banks. They don't rely on rigid, outdated checklists. Instead, they look at the real value of your collateral and your track record as an operator. They see the potential that the big banks are missing. They have flexible solutions designed specifically for this refinancing wall crisis. For example, maybe you don't need a whole new loan, but a way to restructure your existing debt. These lenders can offer creative solutions like extending your amortization period. By stretching your loan payments over 30 or even 40 years, you can dramatically lower your monthly payment, instantly fixing that debt service coverage ratio and making the numbers work again. Or what you really need is a strategic equity injection to pay down the loan and reduce your monthly burden. These private capital networks can connect you with partners who want to invest in solid, well-managed properties just like yours. And then there are the private lending products themselves, like non-QM and bridge loans. These are lifesavers for investors who don't fit into the traditional bank's box. Non-QM, or non-qualified mortgage, loans accept flexible income documentation and different debt-to-income thresholds. A bridge loan can provide the short-term capital you need to pay off your maturing debt, giving you the breathing room, maybe 12 to 24 months to stabilize the property, increase rents, and then refinance into a more permanent long-term loan once the numbers look better. The point is, you have options. You just need to know where to find them. This economic hurdle isn't a dead end, it's a detour. And with the right guide, this detour can actually lead you to a stronger, more resilient financial position. This is where we come in. At Commercial Lending USA, we live and breathe these complex financial situations. We're not a bank, we're your strategic partner. With 30 years of underwriting expertise under our belts, We've seen every market cycle imaginable. We've built a massive network of over 1,000 private lenders, family offices, and specialized capital providers across the country. Each one has a different appetite for risk and a different set of lending criteria. Our job is to be the matchmaker. We take your unique situation, your property, your numbers, your goals, and we connect you with the exact right lender who has the perfect solution. We do the heavy lifting, navigating this complex landscape for you, so you can focus on what you do best, managing your properties. Don't let a market shift dictate your future. Don't let a no from a traditional bank be the final word on your success. The right strategy can turn this challenge into your next big, competitive advantage. If you're facing a maturing loan, or if you've already been turned down for refinancing, don't wait, time is critical. Visit our website at www.commerciallendingusa.com or call 855-365-9200 to learn more and see how we can help. Thanks for watching, and don't forget to like, comment, share, and subscribe for more updates.